What's going on, money lovers? Welcome back. So today I wanted to do something a little bit different. I've been doing, a lot of stock analyses, and I want to change it up a little bit. So what I'm going to bring you today is we're going to start a new little investment club series here on the channel, and I have dubbed it the Spend 10K, Make 10K Challenge. I just opened a brand new account that I'm going to be doing this challenge in, and what I'm going to do is gradually deposit money into the account until I reach $10,000. So I'm planning to put between $500 to $1,000 probably every couple weeks. Figure for the next 2 months or 10 weeks or so, however long it takes to get there. Once I have the 10K in the account, I am not adding any more money, and the goal is going to be to turn that 10K into 20K 1 year from now. So I opened the account today, 1 year from, what is today? December 17, 2020. So December 17, 2021, my goal is going to be to have at least doubled the money in the account. I'm going to take it one step further. If I fail to do this, I will donate the difference to charity. So if I end up with $18,500 in the account on December 17th, 2021, I will donate that $8,500 to charity. As you can see, the studio here is still a work in progress. It's slowly getting there. So before we get started, today I'm mainly going to be talking about Arkg. I'm going to be adding it to the account. It's going to be my first purchase. I'm going to explain why I like Arkg, talk a little bit about the company if you're not familiar with it, and what I think the future holds for this company, or this mutual fund, I should say. Arkg Invest is the company that makes the Arkg mutual funds. So if you're new here, don't forget to hit that like and subscribe button right now so you don't miss out on any future videos. And let's get started. I'm on the Fidelity homepage here, and as you can see, in my main account, I'm up 240% in the past year compared to the S&P's a little over 17%, 17.5%, let's say. So that's in my main account. Obviously I have a Roth IRA, a couple other accounts with different brokerages. This is with Fidelity. I've maxed out my Roth IRA, making my high school economics teacher proud. So anyway, I've definitely, I've worked really hard to get here, and I definitely put in a lot of research to do this. It's also been a lot of luck. I mean, I don't expect anywhere remote to these types of returns to continue. It's just not possible. But we're going to try and do it anyway. Get 100% return we're shooting for next year. So anyway, if I open up the new account that I just started here, I just deposited $1,000 in, and today we're going to be putting that money into Arkg. So I'm hoping with this series, I like to be completely transparent with you guys and tell you the moves that I'm making. And this way you can follow along in real time. I'm planning to, if not record every time I make a purchase or sell something. If not that, I will let you know, within a couple days. Definitely try to stick with that. So today I'm going to put this $1,000 into Arkg. Order type, we're going to go for the market order. We can get 10 shares today, pretty much. That'll leave us with a little bit of cash left over. All right, so that should go through. Hit the refresh. Very exciting. So we've got our 10 shares of Arkg now at a cost basis somewhere around this $93.73. So now as to why I buying this company. I've been wanting to do this for a while, and I kind of just kept putting it off, watching things go higher and higher. So really quick summary of Arkg, if you're not familiar with it. It has gotten a year-to-date return of 181%. Wow. Expense ratio, not the best, but not terrible. Anything under 1% is not too bad. Expense ratio of 0.75%. It's not a Vanguard. You're going to pay a little bit, but I mean, to get these types of returns, obviously the past is no indication of the future. If we look at more of its performance, so it's relatively new. It's only been around since 2015, and the 2020, obviously, it's not showing up yet. Year to date, though, you see it there, 143%. 2019, 2018, 2017, got about 100% in total, let's say, if you put those three together. That's not true, but let's say 94% around. People also watch these other Arkg funds, which maybe I'll get into next. Who knows? Maybe they'll end up in the portfolio. You may have heard of Arkg. This is their main fund. What do we got? Bill Gates-backed electric car battery startup is on the cusp of changing the. Oh my God! I can't believe these people really get paid to do this stuff. There's just I don't know why anyone watches anything but the investment club, to be honest with you. Anyway, so the year-to-date return for Arkg is 148%. I also own this fund in my other account. It's got around the same expense ratio, and if you look at their performance, it's just incredible. I mean, 87% in 1 year, 35% 2019, and then year-to-date 81%. This is mostly thanks to Tesla. That's the biggest holding in this fund. Tesla's sitting around 10%. This may not be 100% accurate, but that's definitely the biggest holding. We take a look at some details with Arkg. So real quick, if you're not familiar with Ark, the thing that they're big into is innovation. They're investing in the companies of the future. They're led by Cathie, who is a fantastic investor. She has been on the ball. She's called a lot of things so far. She was talking Tesla years ago when everyone, was laughing at her. Now she's laughing to the bank. So they're going for things that include gene therapy, bio-inspired computing, molecular medicine, and pharmaceutical innovations. If you don't know what half those words mean, that's fine. I'm with you. That's why I trust myself putting my money into Arkg. I'm not even going to pretend I understand all the science behind these companies. I try and do my best, but I feel much more comfortable letting them decide on what biotech companies we're gonna invest in than me shooting my shot with a high probability that I will lose all my money. I do not claim to be any type of expert in genomic and healthcare. So if we take a look down here, there's sector weightings. It's majority healthcare, 96%, and a little IT, and that's another reason why I've been wanting this. In my portfolio, I feel like I lack healthcare exposure. I own a little bit of Johnson & Johnson. My medicine, obviously, you've seen me make a few videos on that. That's a biotech company too. That's my gamble. I don't really see it as a gamble, but at the end of the day, I'm not going to go out trying to find 10 other mind meds. It's just I'm going to lose all my money. So anyway, I've been wanting to get more healthcare exposure, and I see this as a great opportunity to invest in the healthcare of the future. And if we look at what makes up the portfolio, molecular diagnostics, beyond DNA, gene therapy is a big one, instrumentation, the other big one's targeted therapeutics, next generation oncology, and then as you can see here, their top 10 holdings. You've probably heard of a couple of these companies. Invitae, CRISPR Therapeutics has been in the news a lot, Teladoc. So here's a list of all of the holdings in the portfolio. It's made up of 49 holdings. The other thing I really like about this is that biotech companies are just such high-risk companies. They're heavily reliant on research and funding. And if their products don't work out, or even don't work out fast enough, a lot of these companies end up going under. So by owning Arkg, $94 a share, let's say their biggest holding, which is CRISPR Therapeutics right now, goes kaput. The worst that could happen here is, let's say you're talking about an $8 loss, and it'll just be automatically adjusted. The other companies will have bigger weightings. That's if CRISPR goes bankrupt, which I don't think is going to happen. Versus if I put all my money individually into CRISPR and it goes bankrupt, I'm going to lose everything. Whereas with this, it bounces back. They're going to find better companies, and I never run out of money unless all 49 of these companies go bankrupt, which I think is highly unlikely. So some of the other top holdings here, Teladoc is one that people have asked me about in the past, and I think that this type of online appointments, Zoom checkups, things of that nature that Teladoc's involved with, I think it very well could be the future. I think you see, especially with senior citizens and the older folks moving to something like this, it's just much more convenient, especially in the pandemic world. With that being said, just because I know that sector is going to do well, it doesn't mean Teladoc is going to be that company who does well. They could go bankrupt tomorrow. Amazon could come out and say they're making their own version of Teladoc and run Teladoc into the ground, or there's other competitors as well that are already in the playing field. So again, I just like this. It gives me diversity. It gives me peace of mind. I know that not every one of these companies will fail. And as you can see here, they even have some holdings in Google. So there are companies that are not mainly involved in healthcare. Pure Storage too, it's interesting how this one found its way in there. It's a company I used to own. Ark, I made a video about the company a while back. I'll link that in the description below as well. So let me know if you have any questions. I'm excited about this series. I'm hoping to, maybe we'll do a weekly or a monthly video update. And again, putting in 10K, I'm gonna do it gradually, obviously, so I dollar cost average in. Once I hit that 10K threshold, I will not be adding any more money to this account. Goal is to get to 20K by December 17, 2021. If I fail to, I will invest the difference. If I end up with less than 10,000, I'm just going to be taking that loss to the IRS. But any bonus, so even if I end up with 12,000, I'm going to donate that $2,000 to charity. I've had a pretty good year despite everything going on in the world, and I feel like I should give back a little bit. And so I wish everyone the best. Hopefully this continues. No guarantees. If you have any questions, let me know in the comments below, and don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.